why do you have, a negative sentiment with this thing?
It all began with, you see, if you really look at how many people are being conned in the name of Deriv, the number will scare you, right? You see, I just uploaded a simple video, right, talking about how Deriv has made Kenyans lose money, and trust me, I received over 20 DMs of people saying so and so conned me, so and so conned me. You see, now that was the real thing that triggered me to wait. Honestly, I can say that this, if you see anyone trading Deriv and you open their account, let's say TikTok account, and you find a link, right? The next thing you do is DM them, obviously. Then they either sell you a bot or tell you to join a third-party site or something related to not trading at all. So basically what I did is, you have to understand that when you're looking at Euro USD, you are looking at an exchange rate between Euro and USD, right? So anytime you open a chart and see Euro USD and you see a number like 1.56 to the fourth digit, which is a P, what you're looking at is the relationship between the Euro and the USD, right? You are looking at a relationship between two currencies, right? But what I really asked myself, what about individual currencies such as Euro alone, USD alone? What are they saying, right? So
Traders, ladies and gentlemen, this is the Top Dollar Trader Podcast, and I'm your host, Omar Charles. So this is episode 7, and before we even go far, I want to appreciate and thank all those people who are giving me feedback. So I'm receiving massive positive feedback, and I want to really appreciate for those people who are supporting me and continuing to support me. So you can also do that by just hitting that subscription button, and it will put me in a position that I'll be able to bring you more and more of this kind of episode. So today, ladies and gentlemen, I'm joined by this one trader with more than 5 years of experience in the market. So he's on, and I don't want to speak much for himself when he can. But ladies and gentlemen, I want to take this time to introduce and bring you Mr. David. So David, man, how are you doing today?
I'm doing very fine.
Yeah, so I want to appreciate and thank you for coming on, man. So I appreciate so much. So we just want to hit this thing on the head. So
Okay.
talk to us. And I want you to take us back. We want to understand where you have come from. So give us that story step by step. So how did you even discover about the markets, and what is this one thing about the market that ignited, that curiosity, feel like this is something I want to do? So give us that story, man.
Now around 2020, that's 5 years ago, mine was weird because there was this guy who was doing at that time Deriv was known as binary, right? There was this guy who was selling bots through Mzungu, right? So when we were there, huyo jamaa akaniapproach akaniambia anauza bot, so I was interested. At that point, even I didn't know the difference between binary options and the real financial markets. But when he tried to sell me the bot, then that was the initial trigger, I could say, right? And that's where I started to dissect the financial markets as they should be. And that's where I first realized that Deriv will not take you anywhere.
Mm-hmm.
Yeah. Then
So
5 years now, I can say I'm doing good. Real financial markets, not the Deriv markets, the Forex markets.
Now, you talked about Deriv, and that was your initiation now into the markets. Then now you are watching other markets. So, how was the transition? Kilikuramba on Deriv, then you can realize that this is not a real normal thing. Then how was that transition now into what you are doing right now?
at that time I was really broke, right? So hadi
Mhm.
kingeniramba hadi kaa ningetaka nisikuwa na pesa za kuramba, unaona? But
Okay.
I am a person who likes to do my research, and I guess that's what really helped me so much to avoid shenanigans that derive.
Mhm.
Yeah. So after that, then I then found out that the real financial markets are either the forex markets, the stocks markets, or the crypto markets. But anything else is synthetic or generated by something, right? So that's it, really. Now 5 years down the line, well, I'm still trading. I've not lost. You see, I see people say that they have lost huge amounts of money, but what I really want to say, if you approach this thing the right way, you see, people lose money when they do things that they are told from day one, such as
Mhm.
bad risk management and reporting accounts. That's where really people lose money from, and I didn't do any of that really.
Okay. Now, like you have talked somewhere, maybe I don't know if I can call it negatively, but you are not for this derivative thing. So, like,
Yes.
what is your experience with this thing? Why is it that it is something and you discovered it is not worth it?
Yeah.
Why do you have a negative sentiment with this thing?
It all began with, you see, if you really look at how many people are being conned in the name of Deriv, the number will scare you, right? You see, I just uploaded a simple video, right, talking about how Deriv has made Kenyans lose money, and trust me, I received over 20 DMs of people saying so and so conned me, so and so conned me. You see, now that was the real thing that triggered me to hate. Honestly, I can say that this, if you see anyone trading Deriv and you open their account, let's say TikTok account, and you find a link, right? The next thing you do is DM them, obviously. Then they either sell you a bot or tell you to join a third party site or something related to not trading at all. So I would say that that's the real trigger that made me hate this derivative thing. I really despite that derivative thing so much because I have a friend who lost over 180,000, and he was left at a very, very bad place to a point where I had to talk about it. Yeah, that's really
Okay.
it. Yeah.
Okay. So it is from personal experience, it is from first-hand experience that this thing, boards and derive,
Yeah.
it is, I even heard that it is randomly generated. There is no historical data that you can track, then get those
It's
pattern recognition.
yeah, totally.
Okay. Now, from you were introduced into this derivative, then you transitioned to, the real markets now, into stocks, into Forex. And what I know is that understanding the markets, either even if it is on stocks or in Forex, it requires a lot of time, it requires a lot of energy. So, like, I want to understand what was your process now in the learning process when you are trying to now transition into the real market. Did you have something like a mentor, or you just went into the trenches alone trying to figure out things? So, what is the process? What was your learning process looking like?
Well, I went through the OG way, the original way of going online and learning everything on your own.
Mm-hmm.
See,
Mm-hmm.
I myself, you see, when you told to trade to trade the financial markets, the first thing you are told is you are taught a concept, right? Either ICT, SMC, phrase action, right?
Mm-hmm.
You know all this, right? So,
Yeah, yeah.
but basically, my first 2 years, I tried those, and I found that they work, but with a very low win rate, right? So
Okay.
I opted to go to another method that's data driven, right? Personally, I trade every day, but I don't use any kind of concepts. By concepts, I mean ICT, SMC, price action. I don't use all those. All my methods are data driven, and that's what makes me unique, right? I don't trade the normal things the way people do. I basically I'm a person who finds opportunity in a market and explains and uses the opportunity to
Mm-hmm.
generate yield.
Okay. Now, you don't use concepts, you are data driven.
Yeah, I'm a
So,
data driven.
so what do you mean when you say that data driven? So, which kind of data are you looking at, and how are you utilizing this data on the market to get maybe some profits? How do you use this data?
So personally, I developed
Mm-hmm.
a model. I'm lucky to have a background in since we were very small, we were
Mm-hmm.
introduced to this coding thing, right? So
Okay.
I was lucky enough to grow up in an environment where basically I saw a computer literally when I was so young, to a point where I had to learn some things such as programming. When I was first introduced to Python class 7, class 8, nilikuwa wale wasi wa science congress, unaona.
Python in class 7, man.
Yeah, those machine learning things. See,
Yeah.
whether if you want a video of me, kuna
Mm-hmm.
kwanga na hii channel inaitwa Angaza Elimu. We
Mm-hmm.
recorded we recorded one of my projects, posted
Okay.
there. Maybe later I can send you a link and you can go and see, right?
I would
So
love to see that.
yeah, I'll send that. But basically that was my life. I've grown up in an environment where coding was like playing with toys, right? So I grew up that way. So the moment I learned about Forex, the first thing I wanted to do is bring in what I know to the industry. Right? I wanted to embed these two things to see if I can make something that makes sense. So the first thing I did is automate these SMC and ICT strategies, and I found out that they have a win rate of around 70% when the market is trending, and a win rate of around 10 to 20% when the market is in a consolidation. So that was not working for me. So I opted to go and approach the market in a different way, where a particular set of data
Mm-hmm.
determines if I sell, right? Not a
Okay.
prediction based on past results. So basically what I came up with is something known. If you ever look at
Mm-hmm.
price, there's something known as perceived value price, right?
Okay.
Let's take for instance Euro USD. There's a
Mm-hmm.
perceived value of Euro USD that's not in the charts. That drives the markets, right? So when the perceived value is greater than the current exchange rate at a difference larger than the cost of doing business, which is spreads and commissions, then that's where I find my opportunity with a buy or sell, right? So
Okay.
basically, to answer your question, how I approach the market, it's really simple because this model generates me the true the true the true perceived value of the exchange rate. Then all I have to do is follow, right? So
Mm-hmm.
there's nothing there's nothing I would like to say there's nothing so big about my strategy, but it really works very well. I've proven
Mm-hmm.
it multiple times in my account in TikTok. People have seen that this strategy provides me a 95% win rate consistently. Not It's not limited by a trend or a consolidation, but it works all day, right? So
Okay.
that's really it.
95% win rate is
Yeah,
very scary,
yeah,
and it makes me now
it's insane.
very, very interested
Yeah,
in what you're doing.
let me just clarify. I've been working on the strategy for around 4 years, and I would like to say I found my eureka moment around 3 months ago. So that's it.
Okay.
It's
Now,
been a work in progress for years.
you have been this on, you didn't start with it yesterday. So you have been using it, but the haha moment, it just came very recently.
Recently. So that's it.
So, yes. Now, like you said you have been on it for 5 years. Then, that moment came 3 months ago. Like, what are some of these things that, were hindering maybe your performance or your profitability? Then now when you have worked it over and over again for all this time, now you are in these positions. So what are those things that were not placing you in a profitable place? Then now you are able to make something from the market right now.
Okay, you see, the funny thing with a data-driven approach is, you see, the way when you're being taught how to trade, you're taught things like risk management, what you're supposed to target per day, right? There are all those things that you're taught. But think of it this way: if your strategy is data-driven, a particular set
Mhm.
of data determines if you exit or you enter, right? So
Okay.
this model itself provides a entry criteria, and
Mhm.
when the entry criteria is void or is overtaken, then you exit. So there's nothing like risk management in my strategy because data tells me when to leave, data tells me when to enter. So there's no really point, there's no really a point to limit myself to how much money I can make in a day, whereas the amount of money I make is determined by the opportunity in the market, right? So I milk the markets from morning till the evening, obviously in the sessions because of the volume. So things like risk management for me and daily targets are out of the box when you are using a data-driven approach.
So when your data, gives you a signal, no matter what time it is, no matter you are in another trade, so you are just going to enter trade.
Yeah. I just enter. Normally, I've programmed my model to alert me, right? So whenever an opportunity comes, I'm alerted, right? And just to specify,
Mhm.
I'm a sniper, right? I take over 92 trades in a day, right? So
Mm.
yeah, I take over 92 trades in a day.
Okay.
Most of them are like I target around 1:1, but
Mhm.
I've found my average to be around 1:0.8, 0.9, around there. So that's really it. But if you really do the math and compile that, you find that in a day I get around 1:24, right? In an RR, if you do the average of the whole thing.
Okay. That
Yeah.
is interesting, and it is. I have never come across, a person using these systems, and that's why it is very interesting that the forex market, there is diversity. You can do your thing this way. If it produces a result, then well and good. But now
Yeah.
taking 92 trades in a day, that is terrific. And now I'm curious, like, how long? On average, how long are you holding on to maybe a single trade? Are you a
Oh,
scalper? Like, what happens there?
I have a very high frequency because there are trades that only last for 3 seconds, right? But I've done my average and found out that my average is around 50, 58, 58 seconds. If it goes so long, if it goes so high, it's around 1 minute and a half. That's it, really. I'm a very high frequency. In fact, I don't manually enter my trades, right? When the alert is sent, I just confirm, right? Just for safety reasons, right? It's, yeah, it's very engaging because I have to sit down for all that time.
Yeah, yeah. You have talked about alerts, eh? So I really don't know. Is there a specific tool or a special tool that is analyzing this data, then giving you this notification, or you have your notification on TradingView? How are these notifications,
So
coming in?
this is how I approach my model. I
Okay.
use MQL,
You
not
use?
MQL,
Yeah.
MQL for
Yes. Yes.
MetaTrader. Yeah. Basically, they sell their API online, right? So with their API, I'm able to use Excel to do my calculations of the data, right? To give me a perceived value that is either a discount, right, or a premium, right? That's if you draw a zero line, you get a premium and a discount. So if price is above what I want, then the alert is sent, because there's a way we connect Excel and MQL, right? Then MQL obviously is connected to MetaTrader 4 or 5. Personally, I use MetaTrader 4 because of the way it was built. It was built in a way it favors me, right? So that's how I really, basically what I'm saying is I combine almost 3 softwares at the same time that are linked, right? We use MetaTrader 4 to connect to MQL, then we use MQL and a Python script to connect to Excel, because Excel does very well in computing data as I like it, and it makes it simpler, right? If I were to manually program the data to be, if I was to manually use MQL alone to compile my
Mm-hmm.
data, then the code would be too long for nothing. So I normally use Excel to compute the data, then I import the data from Excel to MQL, where now I can give instructions, conditions for buys and sells, and where my alerts will be and all that. Then I display everything as a model in my MetaTrader 5, because at the end of the day, we need to see those graphs to identify where price is and to see everything manually, because we are humans, we need to see, right? Because if you open my Excel, you basically see a bunch of numbers running,
Mm-hmm.
calculations, right? But at times we need to visualize and see patterns, right? Because the only thing I take from price action or retail is patterns are patterns. The markets moves up, down, or sideways.
Mm-hmm.
So this data, as we speak of it, it needs to be visualized. Now that's where
Okay.
NT4 comes by. But basically, I can take trades without a chart. Do you understand the gravity of that? I can take trades
In,
without a chart.
it is the first time I'm introduced to taking a trade without a chart, because the normal thing is that you identify a pattern on the chart. Then that pattern gives you an entry, an entry criteria, whatever. But if you are not using a chart, then this is a new thing you are introducing.
You see, there's no need of using a chart, because, okay, let me try to pitch you what I do
Mhm. Mhm.
in a very simple way, right?
Yeah.
Basically, when you look at the foreign exchange market, you look at an exchange rate, right? Let's
Yeah.
take, for instance, I personally have based my model to through Euro USD, right? And the
Okay.
reason why, I trade the forex markets and not um, not the crypto markets or the stocks markets is basically because of a very simple statement, which is the foreign exchange market is the most efficient market, right? So tiny inefficiencies are fixed so fast, right? And I take advantage of those inefficiencies, right? So basically what I do is, you have to understand that when you're looking at Euro USD, you are looking at an exchange rate between Euro and USD, right? So anytime you open a chart and see Euro USD and you see a number like 1.56 to the fourth digit, which is a pip, what you're looking at is the relationship between the euro and the USD, right? You are looking at a relationship between two currencies, right? But what I really asked myself, what about individual currencies such as euro alone, USD alone? What are they saying, right? So basically, if you look at euro USD alone, you are looking at around 8% of the market, right? But if you ask yourself, should we trade the market or a part of it, right? If you ask yourself that question, basically, if you want the most good, if you want how can I phrase this? If you want the best results, you have to look at the whole market, right? The whole market will not lie, right? You have to understand that everything that you see is interconnected, right? If euro does a move, it's a result of all currencies, right? Because as I told you, the foreign exchange market is very effective, right? So if you look at, let's say, euro USD alone, and you fail to look at what euro GBP is doing, and both share euro, then there's something you're missing out, right? So you have to look at the whole market at the same time, and now with all that data that you have, come up with a way to predict. Not I'm trying to avoid the word predict, because if I bring about the word predict in all this, I will start speaking the retail things, and I hate retail because most of the retail people really don't know what they are doing, because you see the foreign exchange market is the most complicated market in the world, and you can't think that you will be successful by doing the most simple thing, right? So basically, you have to adjust your angle from the euro USD side to the global markets, right? So basically, what my model focuses on is cross-border money flow, right? So by cross-border money flow, I mean, this is how the banks do business, right? The banks don't trade euro USD, right? They look at an individual currency, right? If there's an opportunity in euro, then they invest there. And there's this famous example I like to give. I've given this example so much time. Let's do something small here, right? I give you 10,000 Kenyan shillings, right? And there are conditions. One, you are not to use this money, right? And the second condition, and the most important condition, you have to go to Uganda for 2 weeks, right? And exchange the money as you cross the border in UG shillings, and you stay there for 2 weeks. Let's assume the exchange rate at the border is 1 Kenyan shilling is equivalent to 10 UG shillings, right? So basically, when you cross to UG, in your pocket you'll have 100,000 shillings, right?
Correct.
Now, obviously in UG, something like maandamano happens in Kenya, right? When maandamano happens in Kenya, basically what that means for the economy is investors will have fear to invest in Kenya, right? And they take out their money or investments in Kenya, right? Because they have fear that the Kenyan economy will fail, right? So the Kenyan money loses value, right? So when you cross back the borders, you're coming back to Kenya after those 2 weeks. When you ask for the exchange rate, the guy there tells you the exchange rate now is 1:5, right? So when you cross to the other side, you basically have lost half of your money, right? So note. Now I want you to focus on these two things. There was value of the money, right? There was the exchange rate at the border, and there was you, right? Now I want you to ask yourself a very simple question. What moved first, right? What moved first? All right. Let me answer this for you the easiest way, right? You are in UG, right? The economy was affected. So the value, right, of the
yeah,
Kenyan shilling lost value, then
depreciated.
the exchange rate followed, right?
Okay,
Are we on the same page?
I'm
Now,
following.
yeah, okay. So basically, what I'm telling you is value moved first, then the exchange rate followed, right? So when you are looking at the chart, you are looking at a relationship or the exchange rate. So you should ask yourself the question, where is the value, right? Where is the value in all this? Because they have given me, the brokers have given me the exchange rate, but I cannot see the value. Now, when you identify the value, then you will have nothing to do with predictions, because we have identified that the value is the exchange rate, right? So if I have the intrinsic value, as I like to call it, which will bring about my sentiment, then I'll just be focusing on the value, right? When the value climbs, then I automatically know that the exchange rate will follow, right? So there is no point in prediction, right?
Using charts.
There is no, I don't need the charts, because if I already know where the value is moving, I'm only using the charts to buy and sell, right?
Okay, correct.
That's it, really. Yeah, that's
Now
it,
I
really.
understand, man. That now I understand. But
Okay.
it is far from the normal. On face value, it may sound very complicated, but now that you have broken it down, now you are able to bring me home. But now you have said you are looking at several things. You are not looking at just the value of the euro. If you are trading euro USD, you have to see the correlation and the relationship with maybe GPP and all these things. So I'm like, which markets now are you watching to finally now make a decision that now this is a buy? Like, what is that process? What utakuwa umeangalia nini? Utakuwa umeangalia GPP? What's that process until now it gives you that confirmation?
The simple answer is everything, right?
Mm,
Every
okay.
single, there are six major currencies, right? So every combination of those currencies has to be computed to bring about the, the true value or the intrinsic value. You cannot look at a single currency pair and tell yourself that you're watching the whole forex exchange market, foreign exchange market, right? You cannot look at a single pair. So in order for you to know the real value of, let's say, euro, you have to look at everything that has euro in it, right? You use you use that exchange rate to come up with the value of euro in that exchange rate. Then you do that to all six currencies. Then you find an average after weighting. There's something we call weighting. Weighting is done. You do it in the code because some currency pairs are more volatile than others. So the result they provide is at times biased, but you have to wait kuongeza kilo kwa hiyo currency yenye iko chini. Ndo when you're finding your average, then you find something logical, obviously, and something that you can be able to plot, right? So when you find the value of euro, then with the value of euro here, then I can go to the exchange rate that I want to trade and look at the value. Then if the value climbs, then I know that if something like Euro USD, if I'm trading something like Euro USD, then obviously that's a nice signal to buy, right? But it's not that simple, right? There are
Okay.
so many things such as skew, such as I calculate the line of best fit using a normal slope, right? There are formulas that I use that I later found out that they are used by hedge funds, but yeah, basically that's it. It's way complicated because note, I spent 4 years generating something, so I don't think I can be able to
Mm-hmm.
really explain to you in the limited
In
time.
1 hour.
Yeah. If I start to explain to you right now, I might even pull out my whiteboard and explain to you how a certain record is doing, right?
And you
So
could have lost a lot of members here. Could have lost a lot of people here. But
right,
it is very interesting. Very
yeah,
interesting.
okay.
Very, very nice. Very nice.
But
Now,
basically, what I can do is I have the beta version of okay the first idea I had. I generated a beta version that I thought it would work. I may send you that and you pin that on your MQL and you can see what I'm doing, but that version will not provide any signals. You just see where the value is coming from.
now there is a lot of programming. There is a lot of data. I mean, it is more statistical. You know, like for a normal person, for a newbie who has no programming background, who has, is not machine learned. Do you think he can be able to replicate what you are doing, or it will have to take him those several years to maybe find profitability with what you are doing?
I mean, as you have said, my method is sophisticated and complex. And to be
Mm-hmm.
honest, over 98% of people will not reach there, right? So
Correct.
basically what I can do is I can take the chance and monetize the idea, but I don't like to do that, right? But it is what it is because at the end of the day, I'm eating my sweat. So
Mm-hmm.
because
Yeah, yeah.
it was not a simple journey, right? Obviously, because there are things that I learned on the way that I never knew, right?
Mm-hmm.
I would even learn, right? So I have like for example, I had to relearn calculus from calculus 1 to calculus 3 just to solve a line of code, right? You
Uh-huh.
see now if you tell a person that you will teach them what I do, what I can only do is provide results, right?
Uh-huh.
Um, but the code is tricky kidogo juu the same case na WhatsApp watupatie code yao, right? You see, okay, it's my life's work, so
That
I'm
is
not
top
keep,
secret.
yeah, I'm not keeping it secret. I can basically share the code, right?
Uh-huh.
I can share the code, but I can give you a locked code, right? You will use the
Okay.
model, right? You use the model, but you will have no access of the code. That's it really how I can help a person, right? But I've not found myself at a situation where I need to sell something to someone, right? Because as we speak right now, it's working really well, but I've not yet compiled everything to a point where I can maybe give a person in, using something like to use it like something like a software, right? Because the code is still, I like to use the term raw, right? So because at times at times I'm given a signal and I twitch several things to get a certain result, right? So my code is raw, right? But yeah, that's really it. Because if I ever find myself in a situation where I need someone to learn how I approach the markets, then the most logical answer is I would like I would compile the code very well, lock it of course, give it some sort of password, but you'll have access of the true value and obviously I will mentor you on how to buy or sell, right? But you will have no access to the code, right? It will be some sort of what I'm thinking about is I can buy a TradingView API and try to mask everything there for if you want to, let's say, if you want to really use my
With
approach, you
uh-huh.
can you can do something like log in your credentials and you deposit there, right? And from there you can buy, sell, and use the model, but you have no access of the code for now.
Okay.
Things might change in the future, but let's see where
Yeah.
the ball takes us.
Interesting. That is interesting, man. And you learned Python in class 7. When I was in class 7, what I was doing is not even close to a computer, man. But I think it's more of a background. You were introduced, you had these systems in your disposal. Then there is that interest and the curiosity. Then you are able to learn these coding things. Then then you found out the market. Then you are able to replicate it on the market. So I don't know if it was coincidental that these things, align themselves till now, but it is what it is. But now I'm curious, like, how are you affected fundamentally? You see, we are just from a government shutdown. You know, during those periods, was your trading affected, or all these news things do not affect you in any way?
So basically, what I want to say is news. First of all, news is always a gamble, right? So
Mm-hmm.
if I ever find someone who says they trade news successfully, then you see, I'm a logical man, right?
Okay.
I'm a person who believes in if something is happening, I want to know what's the reason why, right? Most people don't ask themselves the simple question why, right? So if a person asks me why I don't trade news, I basically say I don't understand, right? Because I don't want to say I don't trade news because it's a gamble. But if I ask anyone why they trade or they don't trade news, some people say news is a gamble. But when I ask them why do you say trading news is a gamble, they basically say someone said so, right? But I really like when I'm speaking to someone, or rather, if I ask a question, I like to go into details and understand why. So, in the whole time I've been trading, I've avoided news, right? Because I have never found a very suitable way to
Mm-hmm.
approach these events, right? So basically, news is a no go zone for me, unless someone wants to gamble news, but I don't trade news in any way.
Oh, okay. Interesting. Now, you said you don't use any elements of risk management. And, I heard that, then my heart skipped a beat. Because for me, I believe that, you know, risk management is the whole goal. Like, you can't do anything in the market without risk management. Now, I really want to understand what is your mindset now when you are executing in terms of the dollar amount now you are going to execute on. Like, how is it informed? Like, you have that constant figure yenye unajua I'm going to the market, then I'm going to risk a certain account, a certain percentage of my account size, or a certain dollar amount. Like, there must be an element of risk management somewhere, because the whole market is all about the risk. So how are you approaching your trade in terms of now executing the dollar amount?
So I like to look at it lot sizes, right? Because
Okay.
when I said I don't concentrate more on risk management, what I meant is I don't use a stop loss, right? Because
Hmm.
there's no really need for one. Because if my data shows me that, let's take a buy scenario. If I enter a market with a buy condition, then my data tells me that that buy is invalid. So I'll just exit, right? I will not wait for a stop to be hit. But risk per trade, obviously, that you must have. But I don't really calculate how much risk I want to take for a trade, because every single trade has different levels of risks depending
Mm-hmm.
on my data set, right? So what I normally do I really just look at the account size, right? I
Mm-hmm.
identify a lot size that I want to use, right? And that lot size, I will use it constantly to the end, right? There is no point where I will change my lot size to a certain lot, right? Because okay, for a beginner, right? I've never really understood why beginners don't understand lots, right? Because basically, if we summarize everything about lot sizes, is basically the higher the lot, the more money you make, and also the more money you lose. So I look at an account, then the account size will determine the, the lot size I will use, right? So if let's take for instance, um, I recently had 2,500 instant funded by a prop firm called Good Funded Trader, and I found myself using 0.09 per trade, right? But if you compute that and the amount I trade, right, in a day, the amount of trades I take in a day, then you'll find out that even if the lot is slow, I'm still making money. But the fact that the lot is low means I'm not I'm not risking that much, right? Because if the market goes against me, I will quickly adjust, right? But if I
Yeah.
used a high lot, a larger lot, then the opposite will happen. But I never find myself even concentrating with risk management, though obviously everyone has to look at their risk because if you are trading concepts, then that is a must. As you said it, risk management, especially if you're trading using something like ICT, SMC, those prediction-based strategies, then
Okay.
managing your risk is everything actually. You have
Mm.
to manage risk well because there's a point, there's a reason why it's called prediction, right? Basically, if you're predicting something, it means you're not 100% sure if that something will go where you want, right? So risk management is one of those things that you'll need, right? But for me, yes, I do risk, but in a different perspective. I look at risk in a different perspective, right? So
Yeah.
that's really, yeah.
That's interesting. Now you have talked about good funded trader. So you are also, exploring these platforms. But now you are taking 90 plus trades. Are you taking these trades on these prop firms or you are taking these trades on a personal account? Because as I understand prop firms, you may find yourself in a very tight corner if you are taking these many trades on a prop firm. But I want to understand, like maybe does a good funded trader, allow this kind of high frequency trading, or you are a part-time trading a personal account and trading a personal account?
So basically, these are you cannot approach the prop farm industry as a high frequency trader in a normal way, right? There are several things that you need to change, right? First and foremost, you need to enter your trades manually, right? You cannot use an EA. Most prop firms don't allow that, right? So basically, what I do, this is my process of figuring out if a prop firm is suitable for me. So there are the rules that you see, right? And there are rules that are hidden. If you have ever traded any prop firm, there are rules that are hidden. Like they never, I've not seen, and most prop firms don't tell you that you cannot use an EA, right? They don't tell you. They wait until you use one, then they ban you, right? Because the whole
Hmm.
model of prop firms is they rely on people to lose money so that they can pay payouts and they can obviously they themselves make money, right? So
Correct.
you have to really go deep into their rules, right? You figure out if they allow certain conditions and you see you know now you figure out how to adjust. By adjusting, I mean most of my trades are entered automatically, right? But
Hmm.
when I'm
Hmm.
I really have to enter manually, right? And if
Okay.
I find an opportunity that I see will last for a few seconds, then when I'm trading a prop firm, I will automatically not take the trade, because if you look at the in-depth their rules, they say if you're scalping, some positions have to stay on for a certain period of time. So that's the tiny bits of adjustments I make really.
Oh, okay. And which programs are you using? Are you using only, got funded, or you have a diversity of programs? Because you see, they say you cannot put all your eggs in one basket. So, do you have all your eggs in one basket, or how are you doing it?
Now, first of all, as we speak, I've been banned by Funded Next banned me.
Why?
Equity Edge also banned me because of the frequency of trading, right? So
Uh-huh.
you see, if you ever find yourself, by the way, these are very good point you have to understand. Most of these prop firms rely on people losing money to make their bills, to pay their bills, right? Because most let no one lie to you. Most of these prop firms you see, they don't provide real capital. When they fund you, that's just a demo account with a changed name to funded, right? They never really give you any money to trade, right? So basically, they rely on people to blow their accounts. That's why they are just. By the way, have you ever heard of a prop firm known as Equities?
Um, I think so. It is based in EA, AE,
That's
Arab Emirates.
yeah. That's a very bad. That's a very bad. That's a very bad farm, because let me.
Yes,
This is what I did. I
yes.
purchased. They had an offer of
Uh-huh.
buy one account and get one free, right? They had a 50K account that they were selling
Mm-hmm.
at $7, and on top of that, they added you a free, right, instant account. So I saw the opportunity and took it. And I did the obvious. I went through their rules. I went through what they offer, everything, and I started trading. I
Mm-hmm.
traded for 5 days. Then I requested for a payout. Then on that day, they added a rule that when I requested a payout of was around 7,500, right?
Mm-hmm.
7,500 after they cut all those things they cut. After I requested immediately, I received an email that my payout is denied because of the EA rule. And that rule was nowhere, right? They added that rule that day, right? So most of these prop firms really really are just, they have crazy rules, right? So, but based on my experience, um, there are three prop firms I like, right, that have given me nice payouts, right? Um, we have Funded Next. Funded Next is a good prop firm, right? It's one of those prop firms I would advise a beginner to use. There is Good Funded Trader. It's a nice prop firm, and the OG, our OG. What's the name of
FTMO.
this? TMO, yeah, the
Yeah,
OG
correct.
prop.
The O in the G. But see,
FTMO is one of the best, but they have really expensive accounts. But okay, I've not used them. I don't want to lie here. I've not yet used FTMO. That's I'm looking to be max allocated by
mm,
FTMO. So, yeah.
mm. FTMO, you see, it was in fact, FTMO introduced the concept of prop farms. All these farms, they are copycats of FTMO. And,
FTMO.
yes, since 2015 till now, it is here. There are so many programs which have erupted, then, disappeared into thin air with people's money, in the recent past. So it is a trustworthy one because it has been there for the longest time. So it means it is going nowhere anytime soon. So very reliable there. Then, you know, in trading, I think you must have some rules. These rules will guide, what you are doing and how you are doing what you are doing. You know, like I'm now curious, like what are some of the things that you have to stay within? What are some things that, you have to confine yourself so that, you avoid maybe that random trading, you avoid that revenge trading, all those psychological things. So talk to us. Tell us what are some of the rules. And by the way, it is not even about having the rules. Sometimes you can have the rules, but if you don't have the discipline to follow all those rules, the rules are rendered very useless. So what are some of the rules, and how do you keep yourself disciplined to day follow on doing your thing?
Now, another thing about rules, right? Because this is one thing I want to say really. Even if you have the best strategy in the world and you lack the discipline to follow it, there's a reason why it's a strategy, then obviously you lose. But for me, I really have only two rules: risk well. The second, follow data as it says, right? I will not find myself entering a trade just randomly because let's say I lost like the last two trades, then randomly now I want to recover, right? And go
Mm-hmm.
against or and not go against data, what data says, right? I just enter blindly. That now is one of the things that I try to restrict myself to do. But overtrading, you see, there's this funny thing I noticed, right? 3 months ago when I found that this strategy is working, the first thing I did, I found I gathered my capital, right? And I told myself that this thing has 95% win rate. So what I'll do is risk every single trade and make a lot of money at once. But that's not what happened because I don't know. There's something with the market when you randomly start to overtrade. There's something with it that it always takes you out. I don't know why, right? It's something with the market.
I
But what
think
I
I sorry to cut you there, but you are talking about there's something with the market. For me, I'm more inclined like there's nothing with the market, but there is so much about yourself because now overtrading becomes more of a you thing, an emotional challenge to you. So sorry for cutting your train of thought, but you can have it on.
okay, I had someone in my career. I had someone say that when you master trading, then there are qualities that you come about with you knowing how to trade, right? Because most of the if you ever speak to a non-trader and just do something random, right? Such as let's say you go to a non-trader to a casino to gamble, right? If you go with an experienced trader to a casino to gamble, you'll find him doing something like dividing the money, right? There are qualities that you get once you master how to trade. There are qualities that comes with it. They, for you to be successful in trading, there are some things you have to change about yourself, right? And
Correct. That
discipline.
is
This, see, people really underestimate discipline, right? Because discipline is it's not just a straightforward thing, right? Discipline is a really tough thing to do. You see, it's simple to write rules down, and it's a different thing to follow them, right? I cannot insist on how many times I have written rules down and sweared, right? I will follow the rules. Then after taking only two losses, then I find
you go
myself
back.
doing my own things, right? You see, when you master that, hey, you become strong. You become a really emotionally numb person. It's really difficult. It's not that easy to follow rules.
Man, I can relate to that. You wake up in the morning, you promise yourself, you curse yourself, you are like, if I do this, this will happen, whatever you do. Then the minute you are in the market, you go back to the same cycle. Now, in the market, losses are inevitable. You have a 95% win rate, but there must come a loss somewhere in time. So like when that loss comes, how are you going to deal with that loss? Like how do you respond now to that loss? Like somebody may hit like maybe two losses, then he's out of the market, or then closed for the day, come another day, or somebody else hits a loss, so he goes in, he doubles his risk to go in and recover the loss, but which is a bad habit, of course. How do you respond to a loss, and how are you going to trade past that loss, or now a losing streak?
No, you see, if you start using such terms such as two trades you exit, um, terms such as a losing streak, now that's retail concepts, right? You see, if your method is not based on predicting, then you are allowed to do that, right? But you have to understand that if data gives me an entry, right, and data gives me an exit, if I make a loss, which I do at times, I will know exactly why I made the loss, right? So in recovery the loss, I can use something such as a martingale, right? So I double the positions in the next trade so that I cover the loss of the last trade and also make the trade, the profit in the latest move, right? I want to really summarize all this to a confidence issue, right? Because if you're not so confident about your strategy, then losses will take you out, right? But if you are so confident with your strategy based on data, right? I'm confident with my strategy because the strategy itself is supported by data. It simply means if I make a loss and I see another opportunity, then I can use the opportunity to recover and make an extra profit, right? So really, that's it really, because if data tells me when to enter and when to exit, then I don't really need to worry about overtrading, right? Because
Okay.
I'm really just entering based on what the
The
market
data.
says. Yeah.
Very okay. And now, which in terms of your trading plan now, like which markets are you watching? I remember you talked about the Euro USD. Then you were also trading sessions. Which sessions are you trading? We have already talked about the win rate, but I want to know maybe the risk. Do you have a risk to reward ratio? Do you do all such kind of things? So what is your mindset in terms of trading plan in relation to maybe the market you are watching, risk to reward ratio and such kind?
Now, let's start with sessions. For sessions, I prefer the London session because it's one of the most traded sessions, right, with the most volume. So if I want larger moves and more opportunities, then I'll trade the London session. For my risk is dynamic, right? I'm not limited to a certain risk to reward ratio because, as I told you, when data tells me to leave, even if I've not hit a ratio that I wanted, I'll just leave because the data is telling me that the market will either turn or go up, right? So that's it really. My risk to reward is so dynamic to a point where I cannot really say that I do trade a 1:1 or a 1:2, but what I can tell you is on average I find myself per trade I take 1:1, 0.8, 0.9. That's the average, right? And the currency pair that I trade mostly is Euro USD because that's where really the core of the foreign exchange markets is, right? Euro itself is a major currency, and USD itself is a major currency, right? So other than Euro USD, maybe I can also trade GBP USD, but my model I build my model with the foundation of Euro USD, and it has been working well, so I have nothing to complain about. Yeah.
Scammers and the scamming activities. People are online trying to sell you a strategy, trying to sell you a course, then they can't deliver. Like for you, have you ever found yourself in a position where you are scammed, and why do you think like this field is so much associated with scamming activities? And how can somebody, there's somebody who wants to, find the information, find the knowledge, learn up and pale. How can somebody innocent who is a beginner, what are some of the things zenye akiona anajua like okay, huyu tu ni pesa nataka. There is nothing that may deliver from there.
The scamming part, why I was not scammed in my journey is because basically, to be honest, I had no money, right? I had nothing to be scammed, right? So basically, I thank God at times that I was broke, right? Because the broke me would have definitely been scammed by some guy somewhere, right? But in the whole process of coming about how I approached the markets, I was so busy, right? I had sleepless nights because I was wondering. Obviously, I knew there is no one. I will not become rich by someone hiring me. I will not become rich by someone giving me something, right? Definitely that was out of the box. No one is coming from anywhere to give me money, right? So I was really focused on the development part, right? So the scamming part will not have found me in any way, but there's a thing I like to tell people, right? People who follow me know this, right? The moment you ever open someone's account and find a link to a broker or find a link to a certain group, then that's the first red flag. I'm not saying that all those are lies, but that's the first red flag, because if you are being scammed, you are never scammed. They are on TikTok, right? Or they are on IG, right? Mostly you are scammed through a group, right? You join a group that they claim is free. Then when you are there, you are told that if you want better signals, go to my VIP group. And most of those groups are basically nothing, right? They give you a bunch of nothing. What I like to tell people is, whoever is teaching you what he's teaching you, I can assure you that that strategy they are teaching me somewhere online, right? So it's really a laziness issue, right? Because most of these people that are scammed, they are scammed in the name of account management. If you really look at account management, you realize that account management is basically someone who is busy doing something or is lazy. He wants to pay you to do the work, right? And you are scammed. The laziness part, right? So if you really need to learn how to trade, I basically would like you to please just teach yourself. In the process, you learn so much, right, that you then sit down and ask yourself what the guy was saying and something you will wonder what really he was saying, right? It's really a simple thing, right? There are very simple strategies out there that have very good win rates. So that's really
That's correct. And I think we are almost on the tail end of this conversation. But before we hang it up, I want to just ask you some 2 questions for the beginners. Then, just anything that, you think, how you think about it. So I would like to know, like, what is the one trading resource? One resource, yenye, it has been very beneficial to you. Imekusaidia and it has elevated you to a position where you are right now.
What do you mean by that?
Trading resource, maybe, it can be a book, like a psychology book. It can be maybe a trading, a channel, a YouTube channel somewhere. There is one resource or a website, all those tools, or a coding website. What is that one trading resource yenye, you have been able to interact with? Now you can feel confident, like if somebody wants to trade maybe your system and they get that resource, inaweza elevate maybe to a certain level.
Okay, you see, I have found out that if you wanna be successful in trading,
Mm-hmm.
if you want higher chances, you should look into not trading every day, right? If you
Okay.
have been trading for a while, you really know that. If you have no access, you totally have no access to complicated strategies such as mine, then
Mm-hmm.
I would advise what I've found to have a very high win rate, and by high I mean over 80%, is swing traders, right? Swing
Mm.
traders make a lot of money. But what you have to understand, being a swing trader calls for patience, right? Because in a
Yeah.
month, you can find that they take around 2 to 5 trades, right? So
Correct.
think of think of it this way: if you really just bought, right, 100k account in a trusted top firm such as Fountain Next or Good Front Trader, then you swing trade that account, right? And you focus in a month to make around 2% of the account, right? You will basically survive. You will eat, right? You will pay your bills. You will do everything just by swing trading. But it calls for very high levels of patience, right? That most people don't, right? And the common
Correct.
thing that we all know is most traders lose because of greediness and all these common things, right? But I would advise people to really listen to what there's this guy known as TJR. Have you ever heard of this guy known as TJR?
I know TJR.
Yeah. There's this guy
I know
known as
TJR.
sells no courses. He does not sell anything, right? To you, right? But
Yeah.
he teaches.
Yeah.
If you really listen to what he says, it might click for you, right? That guy really takes almost 1 or 2 trades, right? He minimizes the number of trades he takes in a certain period of time, right? Because you have to understand, as a retail trader, you are disadvantaged, right? From the beginning, you are disadvantaged. So,
Correct.
what you want to do so much is, let's say, you are analyzing the strategy or you are analyzing a setup, right? What you really wanna this focusing on is not getting the setup, is why you should not trade that setup. That's what you should be focusing on, not why you should take the setup. You should focus more in why you should not take the setup, right? Because at the end of the day, if you really want to make consistent gains and consistent payouts, if you are using prop firms, then you have to try to trade. You have to try to trade less, right? That's how I can minimize everything, and that's it. That's if you are trading any particular strategy that basically predicts the market, right? So that's basically it. Follow that guy. There's that guy known as TGR. I've listened to what he says, and I've watched his bootcamps. And I've found
Mm-hmm.
out that based on what I see online, based on what he says, he's the most sensible guy, basically, that I have seen. And I think for a beginner, if a beginner really followed what he says, then I think success will just be instant.
Yeah. Yeah. Like, taking 2 trades, it's more of taking, less is more. You better take 2 which are quality setups.
Yeah,
Instead of taking, like 20, just to maybe keep your adrenaline pumped up. But
yeah.
that's interesting. Then now I want to know, like you've been in the market now for 5 years. You have gained that experience. So there is a different perspective that you have about the market. But now, if right now you have to go back again, yeah,
Okay.
to that first moment, what are some of the things you will do different? Like instead of it taking you some 4 years to realize that profitability, maybe they can reduce that timeline to maybe a year. Like if you have to go back, what can you do different?
first and foremost, the first thing I will tell myself is, what's the rush, right? I really don't understand what's the rush with forex traders, because you hear about trading, then you want in 2 weeks to make all the money, right? That was really the problem, right? Because if you really learned how to be patient, right, and accept that you don't know. You see, there's this thing I see that happens very common. Someone is told or is introduced to trading, then after 2 days he's there pitching to people. I trade whatever, right? He's flashing a demo account to people who don't know how to trade. That's really what takes traders down even before they reach where they reach. And one other thing I know, right? There are people who think that they are profitable. Right? You see, what I tell I ask, if you ever ask any trader, right, if they are profitable or not, they will tell you they are profitable, right? But I normally, my followers know that I ask for equity curves, right? Like, I had an argument with the Deriv guy. I told the Deriv guy to provide me with an equity curve. He himself didn't even know what an equity curve is, right? You see, okay, basically an equity curve, for those who are watching and might not understand what an equity curve is, an equity curve is basically a curve that shows how your equity has been growing, right?
Fluctuating over time.
Yeah, I don't want you to show me blues. Then when I ask for an equity curve, those blues are only on one day, then the equity curve has a negative gradient, right? So that's really it. If you want to know if you're profitable, first of all, you need two things. You need a stable, positive equity curve, right? And you also need to backtest your strategy and find out what your win rate is.
Okay.
That's really it. That's the only two things that you should do to know if you're profitable or not. But you cannot just take 2 successful trades and say you're profitable. You really have to test and have the data to prove that you're profitable, right? You can lie to everyone, but you cannot lie to yourself.
Yeah. That is interesting. And I think we can just hold it there. It is 1+ hour, and I really appreciate for you coming on. And there is a lot of value that you have shared, and I'm very sure 1 to 3 people maybe at home can find value in this. So, ladies and gentlemen, that is the end of this episode. If you like the episode, you can, give me a thumbs up, and don't forget to subscribe. But more important, talk to me on the comments what you think about this high frequency trading setup. But that was my time. So until next time, peace.